Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Today, my guest is Richard Canfield with Wealth on Main Street. Welcome, Richard.
Happy to be here, Glenn. Excited.
Yeah, I'm excited to have you. And I've been listening to your podcast for a long time. It's educated me to really get into infinite banking and then also encouraged me to become a practitioner, and just happy to have you on.
Well, we're excited. We need more good people spreading Nelson's message and doing it in a way that he intended. And we've seen a lot of, I think, really good growth with the Nelson Nash Institute, and the way that they go through an interview process and bring people in is unique and different, I think, in comparison to a lot of other organizations. And I've had the pleasure to serve in the last coming up on 3 years as a member of the Practitioner Council, supporting the board of directors of the Nelson Nash Institute. And we've helped put a lot of initiatives forward, including the coaching academy that we launched for practitioners. So it's exciting when we get to meet new people like yourself. We get to see people embracing Nelson's message and moving themselves and the people they love and care about closer to what I would refer to as the light of financial control, that we can shine a beacon amongst people's long-term vision for their future.
So just because you are so close to the Nelson Nash Institute, okay, so I did a lot of research. I had to pass the test. What is the whole reason for teaching Austrian economics?
So Nelson himself, the entire premise, the whole package of the infinite banking concept is a coalescence of events and understandings and mindsets that Nelson pooled together over his lifespan. One of those first things is Austrian economics. And he was introduced to Austrian economics at a party. And the gentleman who was hosting the party, he ended up handing him a magazine called The Freeman. And this is, I'm doing this from memory here, but I believe Nelson said this was probably somewhere around in the mid to late 50s. He was at this event. And so he got this magazine called The Freeman. And he said, if you like it, you can subscribe to them. They'll send you the copies for free. And after a year, if you don't send them any money, they'll stop sending them to you. So, he read it, he gobbled it all up. And Nelson was an avid reader, he just absorbed information in a crazy way. And he returned to that gentleman. He says, okay, I got 2 questions for you. Number 1, where y'all been hiding this stuff? And number 2, why you been hiding it from me?
Yeah.
Okay. So he was all in at that point. And so that then with his forestry background, because prior to that, he had gone and gotten a forestry degree. And so foresters are trained to think long range. You have to think about the 40-year cycle and horizon of planting, prepping and planting trees, planting forests, when you're going to call. So how you can create like an ongoing stream of income, which makes its way into the infinite banking concept. It's all kind of isolated there in a moderate way. And there's also elements around classification of trees. He had courses on classification that kind of finds its way in the infinite banking concept a little bit. And then he got into the insurance business years later. And so you have forestry, you have Austrian economics, you have the insurance business, and these ways of thinking and mindsets and plus the product of whole life insurance all kind of coming together in Nelson's life. And Nelson, he had a lot of policies. At one time, he had 49 insurance contracts. And, he had 3 death claims throughout his life while he was alive on policies. And then when he passed away, there were 17 death benefit checks that were cut. But there were still 28 remaining. At that point, there was 45. So there's 28 remaining policies that transferred over to remaining members of the family. And, since then, unfortunately, we've lost Mary Nash. She passed away, I believe it was about 2 years ago. She was a wonderful soul. I mean, that lady had a heart of gold. She was just so much fun to be around. And I actually remember very fondly one of my last good conversations I had with Mary and Nelson was actually in Birmingham, and we were at a restaurant, and I got to sit beside Mary. And so I just asked her a lot of questions about their marriage and what helped them get through the things. And so the things that I learned from Nelson went way beyond the infinite banking concept. I learned about life. I learned about how to have a 65 plus year marriage, how to do things with longevity but with meaning as well. It was really, really inspiring. So that's how all those things kind of come together. And Austrian economics there's 3 primary schools of economic thought. You have the Keynesian school of thought, the Chicago school, and the Austrian school. Now it's called the Austrian school, even though it's headquartered in the United States, because the people who forged it, forward all came from Austria originally, like Ludwig von Mises and stuff. But what was really powerful about that model is that they have isolated the business cycle. And as a real estate guy, we were talking about syndications before you hit the go button, Glenn. Austrian economics in the business cycle is all about the boom bust element that exists.
Yep.
So everyone who's listening to this and everyone who's involved in real estate, they will know that boom bust cycle. And because of the manipulation of things like interest rates at the Federal Reserve or what have you, that sends a false signal to investment. And that false signal is a Keynesian economics point of view.
Yep.
The idea that you can print yourself, you can print money into prosperity. You could basically live off of the ongoing credit card of the economic machine. That's more of a Keynesian model of thinking. And it's not really, it's proven to create and in fact exasperate or expand these boom bust cycles. So the Keynesian model is all about the impact of human action, and that when people have the right inputs and the right information, they'll take the necessary action. And that if you are going to invest in a big project, you have to make sure you have your ducks in a row. And if you lose it, you lose it. That's the way it goes. But you're not losing it because of some outside market influence like government manipulation, like the printing of the money supply. And so the infinite banking concept at its core has often been described by people as Austrian economics in action. So economics is theory, and it's an understanding of essentially human behavior and how things integrate and move around. But when you take that and then like a lot of people in the Austrian movement, they talk a good game about what's wrong with the world, but nobody gives you anything that you can do about it. They say, well, you could go buy gold. Wow, it's a great inflation hedge. You can go buy gold.
Yeah.
Like, great.
Yeah.
Is gold going to go buy my milk and my eggs from my fridge and my feeding my children on my table?
Yeah.
It's not. And if I want to have all that great gold and that silver and stuff, it's pretty hard to spend it if it's the most quality, high, best value monetary money that I can get. I want to keep it. I don't want to get rid of it. So why on earth would I sell it? Which means I'm moving cash flow to go acquire it, but I'm never selling. So then how am I funding the rest of my life? Like, it doesn't solve any of those day-to-day challenges. The infinite banking concept is Austrian economics in action. It allows you at your personal level, at the personal family economy, to have a direct and positive impact on the long-term value of what your family can do and achieve, the protection of your family, which we have a responsibility as human beings, as parents, as grandparents to do that. That's my personal belief, and Nelson felt the same way. And no one forces you to do it. So coercion in the government sphere and in the economic space is a problem. And with this model, it's a voluntary choice to participate in the idea. Because it's voluntary, that's another element of the Austrian mindset coming into play. No one forces it upon anyone. You choose to go down this path. Does that kind of make sense?
Yeah, definitely.
And additionally, we have the impact of the insurance companies themselves. Well, they're not allowed to inflate the monetary supply because a dollar is a dollar in the participating account. They don't have the capacity of fractional reserve lending. So if we take our quote unquote deposits, in this case, they become premiums, and we redirect where we would save and store our money on the books of some commercial banking system, and we now shift those former deposits over here into premiums in some way, various members of the family and so forth, then now we're changing where we store that. So we remove the ability for the commercial bank to manufacture money on our deposit if it's not sitting there. Does that make sense? That's part one.
Yeah.
Part two is this. What a lot of people don't realize, Glenn, is that there's a lot of things that are part of the cause of the creation of inflation in our world. But the number one cause, they say, is the printing of money. However, people picture a money press in their mind. That's what they picture when you say printing money. That's not actually how they do it. Here's the thing. The Fed allows that they buy or create these assets, and then they allow essentially the commercial banking sector to do loans. They want to spur lending in the marketplace. But the commercial banking sector can't give anyone a loan if no one comes in and asks for one. Does that make sense?
Yes.
So if you don't ask for the loan, there's no loan created, which means the money doesn't come into existence. The money comes into existence when you get approved for the loan and you sign the documents. The moment you sign the documents, you're signing a commitment to repay with real money. So you're repaying with real money, real value, real hard work, real effort, but the thing that was created wasn't really there in the first place. It got created the moment you signed the document. So the people that create the inflation is actually you and I. It's the general public. They just don't know they're doing it. They're allowed to manufacture that money out of thin air because of the rules, but the people that make it so, like when the money is created, a lot of the time has to do when the loan structure is created. Does that make sense?
Yeah.
So by moving our lending business and our quote unquote deposit business into the sphere of a mutually owned insurance company, not only can we become personally profitable, have more control and autonomy, we can also be part of what Nelson and the Nelson Nash Institute refer to as the solution rather than the problem. So you don't need to go and get like love Ron Paul. I got to meet Ron Paul. We don't need to go and rant and rave about end the Fed.
Yeah.
It's cool to do that. I would happily join one of those rallies. But we could just simply secede, is what Nelson said, from their way of thinking. We can secede from their system by moving into this system, and you don't even have to tell anyone you're doing it. You just get a lot of other people doing it, and eventually they're going to wait, like, what's happening? Where's all the deposits go? Why is no one asking for money? Why does the insurance company have record profits this year? You know what I mean?
Yeah.
So we don't have to force a top-down solution. We need a bottom-up solution to a top-down problem.
Yeah, definitely. That was my first thought whenever I heard about economists. There's a Warren Buffett line that talks about never seeing a rich economist or something like that, because it's like we're not trying to predict the economy. We're just pushing our cash to the right areas. We're just trying to recapture the interest and also just trying to keep control of the capital. And I think that's kind of the biggest thing I've got out of it, for sure.
You know, there's so many areas in life. Pick any other area in life. Where is it that you try to find some measure of control over your life? Your morning routine, when you set your alarm clock, when you set your bedtime thing on your phone so it's not ringing at you in the middle of the night when the spam calls show up. Like, that's an area of you influence control over your life. The purchasing decision to go get the Android phone versus the iPhone. You know, what grocery store you want to shop at. You know, are you going to get grass-fed beef or are you going to get the regular beef? Like, these are all choices that you have a level of control over. How you manage your diet, when you do your exercise. People are always trying to find ways to exert little elements of control over their life, but they're not putting a great deal of attention on how much financial control they have over all the aspects of their life. And if they read page 65 of Nelson's book, which is, he says, by the time you get to this page in the book, you probably realize that this might be for you, but the next thing you need to know is you need to have desire.
Yeah.
The commitment to get out of financial prison has to become a burning desire. And you have to reevaluate where you're spending your capital, because all people are prioritizing right now where they think is best. So you have to have a reevaluation period. And you obviously would work with a coach like yourself, Glenn, to try to figure out, well, what could I change and adjust in my life to create more baby efficiency and exert more control? So you have to have desire, you have to have a commitment, and you have to want to improve your circumstances, which just wanting it is different than wanting it and doing something about it. A lot of people want stuff, a lot of dreamers out there, but infinite banking concept isn't for dreamers, it's for action takers.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. Definitely. And just from my experience, it's like we could save up a big pile of money, and that could be one way. But from my experience, I left my job twice, my W-2 job. The first time I left my job, I left with no income, and I was going into a 100% commission job, and I had about $30,000 cash in my bank account. And I think what I learned in that scenario is that I might have had $50,000 to $100,000 in my 401k or whatever. But I learned then that it was like, I need, for one, cash flow, and I need a reserve. So then I ended up going back to that W-2 job. And then I still, when I went back to that W-2 job, I had no idea that I was going to be, I was like gung-ho about putting more money in my 401k. I still hadn't learned my lesson. And once I turned off that switch of like, what am I doing? I'm making myself illiquid and also not buying cash flowing assets. And once I switched that thinking, it took me about 2 years to become financially independent, to where I was able to take that next leap where I might have, I was making $150,000 a year. And then I ended up being able to leave to make like $1,500 a month is what I ended up leaving. But I had cash flow assets over the top of that. Mm-hmm. So it gave me that warm blanket, and I had about $100,000 cash in my bank account is what it was. So it turned into that, like, how do I have that a good platform to leap. And I could tell you that hindsight, if I would have been practicing the infinite banking concept through all that, I would have actually been even in a better situation. But it was through learning and having these experiences and struggles is kind of how we got to where we're at today. So
When you just identified a few different areas where capitalization came to play in your life, the capitalization of,
Yep.
I need to make these 2 years work by learning, understanding, getting into more real estate deals, creating cash flowing assets, building up $100,000 in savings so that I'm capitalized for the transition period of my life, which I know I'm focused on right now, right? So
Yep.
those are, while you may not have had a policy to be involved in the mix, the behaviors that you're identifying are the behaviors that are necessary to be good at this infinite banking concept. And, I had a similar experience like yourself. I'm a recovering electrician by trade. My final day as an electrician was February 6th of 2008. Now, 2008 wasn't a particularly fond financial year for a lot of places in the globe. And at the time, I was taking possession of a new house that I had built, and that was in a couple of months. It was in May. The point in time where I took possession of that house in May, where I had now left my T4 W-2 equivalent job. Well, technically I was contracting as an electrician. But still I was, 2008, I was making 150 grand as an electrician. I was running a crew of people. Like I was doing pretty good.
Yeah.
And I think I had saved up around, at that time, somewhere around about 50,000, because I was also planning on making the transition. Originally, I was actually going to load up until I had much closer to 100, like somewhere around the 85 range I thought would be reasonable. But they were making adjustments on the job site that I didn't feel comfortable with, and they were trying to unionize. And I'm like, that's it. I got to pull the grenade. I got to light this. I got to burn it down. I'm out. I'm not doing that. So, and then I had a surgery booked, and I was a 4-week recovery time. And then I went into a real estate licensing thing. I got my real estate license because that was my transition job. And that took 2 months. And then I took possession of the house. And so it was a lot of money out.
Yes.
And no money coming in for quite a period of time. And then, okay, great, I'm a real estate licensed person now. And so there's still no money coming in. You still have to go and hunt and create. And so, I think in that first year, I did okay in that I probably made maybe somewhere between $40,000 and $50,000. But I'd also had to tool out a whole new house and all these things. And, I had roommates, like they were paying the mortgage and stuff. Like I had all these things going on. So I was able to get by, but it wasn't easy. And it didn't take long to deplete that savings, And it wasn't long after, it was about a little over a year and a half later that I got Nelson's book. So here I was, I'm just starting to ramp up and build this like real estate business. And in that time frame, another business thing came up that I started working on. And then that started going okay. And then it got sort of shut down by the provincial government at the time. So then, then I get the infinite banking house. I'm like, okay, well, I got to do this. I'm like, how am I going to get all this worked out? So in that transition time, it's not like I just started to grow one business. I actually started to grow 3 different businesses in like a 3 or 4 year period of time. And when you divert your attention, it's difficult. So the real estate kind of suffered, and I didn't get my running start into the infinite banking space as much as I wanted to, because I had to still, feed the beast, my expenses.
Yeah.
It was hard. It was hard doing all that. And, I talked to a lot of people who want to get into this environment, in this industry, insurance or whatever, but they're not prepared. They haven't done the capitalization, haven't set themselves up. And the thing is, they don't know and understand what their expenses are like. They also don't realize how much they need to really manage the adjustment. Because if you go from making a certain amount of money to making none, it takes a while for your attitude to adjust to that new reality, You might think you have it, but you don't, you know what I mean? It takes a while to really get the new habit kind of lined up. And the result of that is like, I had a lot of really hard years. I'm grateful for the experience. I wouldn't change anything, because all that hardship leads to better understanding. And it's also going to help me create really good lessons, I think, for my kids. Now, I'm used to working hard. I grew up on a farm. I'm from a small farming community. I had a family-owned business. I used to move portable toilets all over Alberta. And I worked, I say I worked like a rented mule. I really do. But, I didn't mind working, and I was good at it. So if you're good at something, dig in, go for it. Don't take that as a problem. However, changing the mindset around work from, is this work, or is this something I get to do? Is this something I have to do or I get to do? And if you can move from have to do to get to do, you really start to change your perspective. And I get to do this. I get to have this conversation. I get to be on podcasts. I get to support mentoring new advisors and teaching my clients how to implement this concept. And I'm standing on a treadmill. I get to do it from my home. And it's fantastic. I could have an office, and that's fine. But I like the idea that I can walk upstairs and see my kids when they come home, and, we can go out and ride a bike, if I have a break in my calendar. Like, That's really, really wonderful. And so I still work and I work hard,
Yep.
but I get to do the work and I love it a lot more.
So on that, just pivoting, I know that you guys are really focused on teaching the message to your kids. Like, how do you go about talking? Because I don't know how old your kids are now, but I've heard your kids are about the same age as mine. Mine are 4 and 6. And it's like, when do you start introducing this? And then like, how do you really start tying the infinite banking? Because this is, I also believe like there's a lot of responsibility with it as well.
There is. And, I'm not going to stand here and say that I'm the most successful at doing that. I do know that I'm trying. And all I can say is what I feel has worked and what I'm looking forward to doing more of in the future. And so the first thing is being consistent and repetitious. So saying and stating things on a regular basis about what matters and what's important. And this book is always around. So the kids come into my office, they see it. I had a whole thing up on my wall. I used to have it on my wall. Like I had the front cover of this book put on a coroplast sign that was 3 feet by 3 feet and it was pinned to my wall for 2 years. So it was there every time the kids seen it. I had a flag made. In fact, I gave a flag to David Stearns. In fact, I made a couple for people and that I still have it. I just don't have a flagpole anymore. I used to have a flagpole in my old house. and that flag is, it's like 6 feet by 4 feet. It's a big flag and it is the cover of this book.
Nice.
I used to fly that.
Wow.
Okay. So those are visual signals that allow you to connect and talk about it. And I always point to Nelson. So if we have a family banking meeting, I bring the book and I point to Nelson. We talk about Nelson. And my kids see Nelson on the screen. The Google Photos or whatever, the iPhotos, they come up on the TV now. Well, there's pictures of Nelson that come up on the TV. And my daughter will say, "Oh, Dad, that's Nelson." I'm like, "That's right, hon. He was really important, wasn't he?" I say, "You better believe he was. He sure was important." We owe a lot of everything that's good in our life to him. Those things make a drastic impact. I'm not talking about insurance policies or policy loans.
Yeah.
I'm only now, Glenn, starting to bring those things in and very high level, very subtle. But I try to find any lesson I can to repeat core critical behaviors. And here are the basic fundamentals that my kids understand. They understand if we go do something big or fun, like a family vacation, that we access money from the family banking system. Boom. That's check mark number 1. Check mark number 2. When we access money from the family banking system, what do we have to do, kids? My daughter or my son? We have to put it back in, Dad. High five, big hugs. So I'm demonstrating that, but I'm not joking. That's a high five. Everyone gets a high five. Everyone comes in for a big hug. There's a physical connection being made mentally to the fact that we got to put the money back in. Then why do we got to do that, guys? So we can use it again later, Dad.
Yeah.
That's right. We're in the recycling business. We're recycling the family money. And we're all working on it together. They don't know how it all works, and they don't really need to know how it all works at this stage. And it might be many years before they do. They also know that they have a signed copy of Nelson's book, each one of them. And they will not be getting that copy until they prove themselves worthy. Now, they don't know what that means yet, but they know that that book is so important that A, they've got a signed copy, and B, they ain't getting it unless they prove themselves worthy. So am I giving them an incentive? Yeah. They don't know what the incentive is yet. They don't know what they need to do. They are going to have to write an exam, by the way. I haven't written the exam yet, but I have some of it up in my head. They're going to have to write an exam. And they will end up getting their copy of Nelson's book. But I'm going to probably frame it or something. I'm not sure what I'm going to do, but I don't want them to wreck it because we can't get any more of those done.
Yeah.
They can have a normal one that doesn't have the signing, and then they have a protected one that's signed, okay? But they understand those things. So you could go buy a couple copies and put your kids' names in it and write a special message in there that's from you. Then you can indicate why this is important and what your hope for them is when they read it and understand and how it implements and impacts the entire family. And you could write a personal message in there from you. And you could let them know, I've got a signed copy of this book for you. They don't know who it's signed by. And this is going to be a special heirloom that you're going to get from me one day. And it's going to help you understand how to look after yourself and your own future family financially. It's going to become the keys to the kingdom of your financial life. But don't worry, I've already got it prepared for you. And you plant a seed for them about the future. You're showing them what the bigger future looks like. And then they now mentally understand, ooh, this book, real important. I'm going to get one. Dad's already putting it aside for my future. This has to do with my future.
Yeah.
The future is bright. I got it. See how that works?
Yeah. I read I think you co-authored it, The Cash Follows the Leader.
Hmm.
And my friend, he sent me a picture of a tree core today. And he referenced it. He's like, all I can think about is infinite banking when I see this tree core. And if you haven't read the book, I would highly recommend it. It kind of lays out the groundwork of what we're talking about right now. Yeah, I love it. It's a great book.
Yeah. There's a 110-year or something case study in here of a client of mine based out of Edmonton with his two daughters, actually, showing how they both can generate a passive income. But I mean, the key thing is this right here. It's how does cash value accumulate?
Yeah.
A lot of people, Glenn, in this space, and when you started doing your research and you first, made the decision, hey, I'm going to become a practitioner, and you've seen a bunch of the stuff that's on there online. You've seen all of it that's out there, and some of it's pretty interesting. Some of it's like kind of scary. Some of it's really good. There's a lot of people who are trying to talk about the rate of return of a policy and all this stuff, but they don't even understand how it works.
Yeah.
I'm like, it's really simple. It's a contract. It's like you got a mortgage. Mortgages are contracts. They're going to give you a big pot of money and you got to make payments. And at the end of the day, a big chunk of that payment is interest that you'll never see again. That's how it works. But that contract goes until the mortgage balance is repaid. You either pay it out early from your own resources or you ride it out in time. But it's for a time and it's a contract. And if you don't make the payments, are you going to hear from the bank?
Definitely.
They're going to send you a nasty letter and they're going to rack up some legal fees and they're not going to be very happy with you. And that's how it goes. So you can't get out of that contract. Well, in this situation, we're going to reverse that. The contract is with the insurance company, but you co-own the company. So you're co-owner. The moment you get into contract, that happens. And then number two, only one party, it's a unilaterally binding contract. So only one party can make changes to the contract. And that's you, the owner, because you're the owner of the contract. It's like if you were the owner of the bank and you wanted to change things around. But the other beautiful thing about it is that your only responsibility is to make the minimum required premium. That's it. You can do a lot of other things. You technically have other responsibilities you can choose to accept. But the only one that's actually required is to make the minimum required premium. The insurance company is essentially putting up a giant pile of money in escrow saying, oh, Glenn, hey, you made your first $10,000 premium here. We've got $1 million of whatever insurance. Maybe it's whole life with some term insurance added in. And then the very next day you get hit by a bus. Well, you put in 10 and they got to pony up $1 million. Who's getting the raw end of that deal? Is it your family?
No,
it's the insurance company. But they're not stupid. They must know something that we don't know, right? It's a lot of numbers.
I look at it when I fill out a personal financial statement because I have to do it for banks a lot. I have a lot of loans in my name, probably $20 million worth of loans, Nelson Nash amount of debt, and adjusted for inflation. But what I'll tell you is it's one of my favorite things to put on that personal financial statement because it's the most rock solid place on my balance sheet. And I think if we just think of it as, I love how when you and Jason are talking that it's so simple. And I like how you guys don't really try to make it more than what it is. But at the same time, the simplicity of it makes it's really a balance sheet item that you're able to borrow against. And it's guaranteed to be there and it grows guaranteed as well. And that's like, it doesn't get much better than that, in my opinion.
And it's interesting because, you've got such a great experience in the real estate game and specifically around like syndications, and you've spoken to a lot of people in that regard. Well, I think it's interesting when you have the main people putting together a project like that, and there's usually one main kind of visionary guy, and he's got a couple other ones just kind of partnered up.
Yep.
And then they go out and they got to seek investment capital so they can raise the money they need to go and close on the deal and do renovations, whatever's necessary there. But they don't ever put on their marketing details like, oh yeah, by the way, all of the principals are properly insured and we have the syndication named as a beneficiary in some way should something happen to us so that we can refill the pot. Like that's not used in a marketing strategy. And I don't know why. Like if I was in the real estate game, I would do that because I think that number one, I would end up with more insurance because the syndication is going to end in 5 years anyway.
Yeah.
Well, when it ends, then you can change the beneficiary to the next syndication. But if you get the right kind of insurance, you're actually building a separate asset outside of the investment project.
100% why I did it.
And then you can roll it up each and every time. And then each and every time it's easier to actually get more investors because you're also showing them one way how you're protecting the project because you're the guy running the project. So if the guy running the project goes, like what happens to the project? But investors aren't even asking that question. I'm like, I don't know, man. Like to me, that's pretty important. So there's a whole, like Nelson would talk about the seen versus the unseen.
Yep.
And like, that's a possible advantage that someone who's smart enough to implement it can use. And I have a few of my clients who are real estate investors who've done some things like that, looking for joint venture partners, not for major projects like syndications, just like, Joe average, buy and sell type of,
Yeah.
50% JV property, right? 3-bedroom, 2-bath house type situation. And it's really empowering because everyone's looking for a competitive advantage to raise capital, especially in the real estate game. Well, what are you doing to stand out? I'm like, this is a perfect way to stand out and do something different while also having more control and being more profitable for yourself personally. Like, that's a pretty good win-win situation.
So, Richard, I'm going to tell this story, and I probably tell this story every podcast, but I can tell you that I've had 2 failed refinances right before I got my policy. And I started learning then how important it is to capitalize and really how much the banks really respect the cash value on a policy. So that was happening. And then I started thinking about when I said that's exactly why I got into it. It wasn't the syndications funding my policy. It was, I have a big portion of my net worth is in syndication. So if something were to happen to me, the main reason why I was like, well, my wife is not going to be able to.
She can't sell a syndication. She's not able to do that. She can't cash out.
That, and then also she's playing in the water with sharks. So it's kind of like, I'd like it to make sure that she's taken care of. And it's like, what a terrible thing it would be to be able to have this good life that we've built. And then on top of that, we need a balance sheet item to show the bank. So after year 3 to 5, you're pretty much creating a fully funded operating banking system that the banks fully respect. And also at the same time, you're taking care of your family, which, I had a couple people die that year that they were older. And this is the thing that made me change my thinking on it. It was, they were older. They were 80 years old. And you would think you can self-insure. And it's like, okay, what I can tell you is that those 2 people, it's not like they lived a lavish life beforehand, but they had to change their way of living after those 2 people passed away. So it's very important, to self-insure I don't think it's realistic. At the same time, say you become wealthy, you're 65 years old, your term policy, it's like, you probably still want to convert that term to a whole life policy at that point. So why not just start one now to have to be able to make sure you're taken care of and also have the benefits of the cash value?
You know who loves people who self-insure?
The insurance companies.
Uncle Sam.
Oh, why is
Uncle
that?
Sam loves it because everything that you self-insured with is taxable.
Yeah.
So you've got, okay, great. You've replaced your $1 million of term insurance because you've got $1 million in some other buckets of assets. But so we have one of our mentors. He also passed away. He was 87 when he passed away. His name was Bob Shields. And Bob was kind of like a Canadian Nelson Nash. He was born in Scotland, but he came to Canada when he was like 19. He wrote a book called You Don't Have to Die to Win. And Bob talked about your future operating line of credit. That's what his premise was. So it was very similar ideas. And we did some training with Bob, and we actually got Bob and Nelson together in a room in Kelowna, BC in 2016. And actually, the sessions from that, you can't see Bob in it, but the sessions from that were never meant to be professionally recorded. We released them, and you can go see all those sessions, a full Nelson seminar if you want, Glenn, at learnfromnelson.com, learnfromnelson.com. I spent a year of my life reactivating all that, doing the transcripts, putting B-roll where you can see Nelson's book when he's talking about different things. It's all available. Any advisor can use it. It doesn't have our name on it or anything. The only thing that gets promoted is Nelson's book. That was my criteria for taking on the project, okay? And anyway, so really, really neat guy. But Bob said, everyone should just have to die for 1 week and see what kind of problems they leave behind. Everyone should be required to die for 1 week and see the problems they leave behind. And if you really understood that, and anyone who's experienced someone that has passed away that's close, or they've had to be an executor, or they know someone who's had to be an executor, the executor is effectively taking on the equivalent of a second part-time job or full-time job for a period of a year, maybe more, if there's anything that's held up in like a probate or any other problem. And it is highly stressful. And when you have to figure out, you have to be an investigative journalist and try to figure, okay, where are the bank accounts? How are we making the payments? And okay, geez, I found another piece of paper. There's another account way over here. How do we get that money out? Oh, we got to get a death certificate to these guys. And then there was no beneficiary labeled on that one. It's like, it's a massive amount of work. Now, if you're self-insured, probability is you're not self-insured with just like one main account where everything is. You probably got a little bit over here and a little bit over there and a little bit over here and a little bit over there.
Yeah.
So what you've done is you've actually created a whole nother job for your surviving family members to sort out your bag of crap. And Uncle Sam wants to take a piece of it because you're dead. So everything that you owned is considered sold on the day that you leave planet Earth, isn't it? So if there's any tax to be paid, that's going to get paid, right? Or hypothetically, riddle me this, Batman. What if we just went over here and we got a properly designed whole life insurance contract? And you know what? Let's add some term on it. So we have the insurance coverage that we need.
Yep.
But then we grow it and we grow it and we grow it. And when the term renewal comes up, we can jettison it off because now we're properly insured and we don't need to rent the benefit anymore. And then when you do go, they just cut a check. And as long as you can get them the death statement and, a couple of basic things that you need to prove who the beneficiaries are and prove their identification, typically by the time that you get all that together and get it sent to the life company, they can issue the proceeds pretty quick. The part that takes the longest is you getting all the documentation together in an emotional state and getting like a coroner's report or your death certificate, whatever you need there. That's what takes the longest period of time. But if you get all that done in 30 days, like within 30 to 60 days, you got a good check in your hands for the most part. And you know what? Uncle Sam doesn't get a piece of it. Like, how ridiculously easy and simple is that? And everyone's trying to bitch and moan about, oh my God, the insurance guy just makes a bunch of commissions on that whole life product. I'm like, dude, how about how much less stress, how much more fun, how much more simple your entire human existence will be when you die because of the people you love and care about, because that insurance guy made a good commission and he was looking out for you. Like nobody puts that together. It's like, you ever heard the expression tripping over dimes to get to dollars?
Yes.
People that don't understand and they want to bitch and moan about like the guy made a commission. I'm like, so what? You got to work for a living too. Everybody has to work for a living. And you know what? I work hard. You're going to work hard.
Yeah.
We deserve to get paid. And when we're providing a value that is untapped like anyone else, when someone dies, everyone else shows up with a handout, except the insurance guy. He shows up with a check. That's worth something.
Just to really close that off, I guess, is we're also able to take back the banking function in our life at the same time.
Totally.
It's like all the stuff that you just talked about is being taken care of by just taking back the banking function in our life. Like I can tell you, you're a great storyteller. I love listening to you. We could talk for another hour, but I really enjoyed having you on. And I'm looking forward to meeting you in person at one of the conferences. And thank you. Before you jump off, where can people find you?
Well, they can certainly go to richardcanfield.com. They can check out wealthonmainstreet.com or head to our YouTube channel, wealthonmainstreet.com/YouTube. And if you want, I'm happy to give people a copy of a free book. They can get our book bestseller, Don't Spread the Wealth. This is actually about family banking meetings primarily.
Yes.
Don't Spread the Wealth. You go to don'tspreadwealth.com, don'tspreadwealth.com. You can download a free copy right there.
I've read both of them and read them within a weekend, but they're inspiring and they're great and easy reads as well. So cool. Well, appreciate you coming on and thanks for jumping on.
You're very welcome. This was a lot of fun, Glenn. Thank you.
All right. Thank you.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.